What's up, everyone? It's Karthik with MoneyVest. So we've got inflation numbers coming out in under 20 minutes right now. We've got the PCE, that's the personal consumption expenditure numbers coming out. That's the Fed's preferred measure of inflation, which is going to be very, very important for the market in the next 20 minutes. As we already know that Tom Lee also discussed about this particular number in his interview with CNBC a couple of days ago. And of course, we are pretty much trading near all-time highs. And this is going to reaffirm the possibility that inflation is in the back burner and we are making some solid progress on bringing it back to 2%. So if you guys can see me and hear me, just give me a thumbs up. I just want to make sure that the audio and the video is working well and there are no technical difficulties, there are no issues. And definitely do share this live stream with your friends and family, other investors and traders that can also join us for this very important print when it comes to the PCE, personal consumption expenditure, the savings rate. Everything is going to be revised with today's report. So when it comes to the previous reports, as you can see, the next release is on September 27th. So that is literally today. And if you take a look at the previous report, so going back to as far as July, which for the numbers were released on August 30th, we essentially are at headline PCE at 2.5%. And then core PCE is sitting at 2.6. So those are the numbers, 2.5 and 2.6%. That's the prior numbers for personal consumption expenditure. And then, of course, we did have the indexes at 0.2%, 0.2%. That was essentially the month-over-month change for those two indexes. And then personal consumption expenditure, current dollars, 0.5% was also that number right over there. Personal consumption expenditures month over month at 0.5% based on current dollars here. So these are going to be the line items that we're going to be focusing on at 8:30 a.m. Eastern. We'll reload this page and that will get updated for August. So you'll see August here. And then we'll take a look at what those numbers look like. We've got a poll going on right now, whether you're expecting for inflation numbers, for PCE numbers to be above 2.7, below 2.7, or at 2.7. If we do get at 2.7, we're going to be at our highest reading since April of 2024, which again is going to, in my opinion, not be the best news for the market because that is going to accelerate that inflation number back above 2.6, right? So we want to see progress in the opposite direction as we are expecting for numbers to come down eventually. And the Federal Reserve with their interest rate cuts definitely is going to put us in a very interesting spot, whether inflation is coming down fast enough, whether unemployment is starting to move back higher. So we're going to have a lot of questions to answer. And again, the economic data is going to give us some of those answers as well. So once again, thank you so much for joining, everyone. If you guys can see me, hear me, just give me a thumbs up on the chat. We don't have anybody in the chat right now. So I just want to make sure that there are no technical issues, no audio or video issues. You guys are able to see everything on screen and also hear me as the microphone should be working just fine. Perfect. Thank you so much for joining here. Drop a like and share this live stream as well, because like I said, we've got these numbers coming out in under 20 minutes. So 20 minutes to go. We're going to get these numbers and we'll take a look at the market's reaction. And we'll talk a little bit about some of the more prominent players like Tesla, Nvidia. Nvidia, for example, is recovering a little bit, back up to over 123. It was much lower. And Tesla here also pushing higher once again to $256. So I'm most likely going to let my calls expire in the money, let go of my shares, and then rotate back into some CSPs next week with that collateral that is going to be freed up. With Nvidia though, it's already rolled out to 1011, so no trades on Nvidia as of yet, unless of course it keeps pushing higher, then I'll roll again to the end of October. But that's about as far as I'm going to go with Nvidia. Only 1 month out, 30 to 45 days max is what I'm going to be planning to roll out to. Other than that, we're going to keep it weekly options for the options portfolio. So good morning, everyone. We're finally towards the end of the week here. Monday is going to be the last trading day of September. And so far, we are green very, very well. S&P 500 is up over 1.5%. The Nasdaq's also up close to 2%. So a very nice monthly gain for the markets so far. So 1.7% for S&P, and the Nasdaq is up a little bit over 2.6%, and the Dow Jones also at a new all-time high, up over 1.4 0.7%. So nice momentum for the markets recovering back up. Tom Lee also sounding a little bit less confident with regards to the market going into the next month here, as he does see that elections are going to be a little bit more uncertain, and a lot of family offices, wealth managers, advisors, they're not committing capital right now because of the lack of clarity related to the elections. And post-election, he does expect significant upside going into November and December for the market. And of course, China continues to rebound here. So Alibaba had very strong days yesterday. It's up another close to 1% pre-market. JD.com is up over 3.5%. NEO is up over almost 4%, so back over $6 per share. And then this right here, the China Internet ETF is up another 2.3%. I mean, just take a look at these gaps for the Chinese ETF. There's also been a short squeeze that's been taking place in Chinese stocks, as a lot of investors and institutional investors and hedge funds and traders, kind of rush to cover their positions because of this massive shift in quantitative easing in China. And this is just a huge pivot, in China with regards to these rate cuts and how much they're trying to stimulate their economy once again. 33% rally coming in since, earlier in September for this China Internet ETF, and just so many gaps that this ETF is leaving behind as it continues to rocket higher. Chinese stocks continue to see that momentum upwards. Gold is trading at just over $2,660 per ounce. Oil prices continue to struggle, so we are at just under $68 a barrel. Got rejected here. So if you come over to the daily chart, you'll notice that we had a very nice rebound from that support of 66 and back up to over 72. Got rejected at that area of supply with the Saudi Arabia also coming in with some production increases. We're starting to see that momentum back to the downside for crude oil. Support level is going to stay put at $66 right now. Bitcoin just back over $65,000 right now. So if you come over to BTC and USD, forgot what that chart was. Let me just go over to my crypto watch list here. And then we're going to open up Bitcoin right about there. And that's the analysis. So we're coming back over to that area of supply and resistance. We're still well within the context of a lower high and lower low if you look at Bitcoin overall. And then finally coming over to Ether, 2600, bouncing off of that nice support, resistance, and target stays put at $2,800 right now for Ether. So that's where we are. Very, very important numbers coming out in less than 12 minutes. 12 minutes to go. Let's see if we can get at least 200 votes on this core PCE inflation expectations. And again, drop a like, share this live stream with your friends and families so more and more people can join. Again, very important numbers for the markets. It's going to reiterate whether inflation is finally coming down to the Fed's target or not. Because if you do see that acceleration higher, let's say 2.8 or 2.9 or 3% for core, the markets are certainly not going to like that very much. So that's going to be on the radar for today. So Alibaba 10-cent rally as Beijing stimulus plans push Chinese tech stocks to a 13-month high. That's how much they are rallying. So Ruben, good morning. Are you still in the U.S.? So not yet. I'm planning to be there at the end of this year, towards the end of this year. So November, December, we'll try to organize a few more meetups with all the MoneyVest members. It's going to be most likely in Florida, and maybe one quick meetup in New York or Boston. So we'll figure that out, and I'll let everybody know in Discord, but not at the moment, not in the US right now. Mike from Stormy, Florida. So hope you're doing well. Again, do participate in the poll right now. 73 votes at the moment for core PCE inflation. And majority of people, 48% right now, almost half of you guys are expecting for core PCE to be coming in at 2.7%. Nvidia needs to stop going up here. Someone needs to stop buying up all the Nvidia shares because it's putting my calls deep in the money as it continues to break out of this 123, 124, 125 levels. So that's where we are. If you have any questions, please feel free to ask. Feel free to let me know in the chat. And yeah, market's at an all-time high. Money Vest Index getting up to 4.08. So, its highest level since July. And I also pointed to this very fact that last time we were at these levels, around 4.17 over here, the markets were right about there. And then, of course, we had a pretty decent correction of about 10% in the markets. We came down to these levels. That was the Money Vest Index coming down to about low threes. And, of course, then a nice recovery back up as the markets also recovered really well. So that's where we are for the Money Vest Index. We're back above 4.08. So, Mo, I got a couple of points. Is it accurate to measure inflation based on the first month news and reduction, as usually motions need time? So would that be scare or a future caution? Is it accurate to measure inflation based on the first month news? So what month news are you specifically talking about, Mo? Like, is it accurate to measure inflation based on the first month news? Like, what month news? And reduction, as usually motions need time. I can't understand the question. Can you be a little bit more elaborate on what is it that you're asking specifically about inflation? And I'm more than happy to help. You started to mention SMH to follow. Would you rather compare SMH to SOXX and having stress on NVIDIA or AMD in concentration? So yes, I think both of them are pretty solid, SMH or SOXX. I think they both have almost an equivalent amount of, like in terms of the constituents, the companies that are part of these two ETFs, they're both semiconductor focused. Yes, there's going to be some differences in fees, some differences in the overall allocation for individual stocks. I just prefer SMH, but SOXS is also a pretty good ETF to consider. PayPal is the worst service. So, I mean, I've been using PayPal for now well over 2 years. I think it's incredible. I don't think that I've had any issues, knock on wood. And if I did, I've reached out to PayPal support and they've been more than generous to help me out with a lot of different, problems that I've faced in the past. So yeah, I don't think PayPal has a worse service. I think they've got pretty good service, because I've been using both their individual and their business accounts, and it's been pretty solid. Okay, are you invested in PayPal? Yes, still invested in PayPal, down 30% right now. That's my only red stock in my entire portfolio. That's the only stock that I'm down on is PayPal. At one point, I was down over 50%, and right now I'm only down about 30% at the moment. Ankur, good morning, Caddy. What's the plan with Tesla covered calls today? So letting them expire, not really doing much unless Tesla can create some more separation. Get up to over 260 today or 265. So if we see some momentum on the day for Tesla, getting up to $260 to $265, that's when I'm going to be rolling these contracts to next Friday. The reason I say that is because right now from 256, where it is right now pre-market, down to 250, that's my call strike. It's less than 3% away. So 3% away is a very, very close buffer, right? So in other words, next week with the delivery numbers, Tesla could be down 5%, and those calls could be out of the money, which is good, right? So we get to keep the entire premium, but I really don't want to be down on my underlying position, right? Because Tesla at 248 is expensive for my taste. So this was only meant to be a trade to begin with. It was never supposed to become a multi-week investment. And so for those reasons, unless I can get a lot of separation, in other words, let's say Tesla gets up to 260 today or 265. So from $265 down to 250, Tesla would need to drop, closer to 6% in 1 week, which is still possible, but a lot less likely than less than 3%, right? So next week delivery numbers comes in, Tesla drops, let's say 4%, 5%, that would still keep me in the money. For these buy rights, you want to be in the money as quickly as possible, because you bought the shares, you want to let go of them as quickly as possible. Because if the stock drops, let's say Tesla drops 10% next week, then I'm just holding the bag on that underlying position. Yes, I can continue to roll out and keep selling calls. That's going to be good premiums, but I still don't want to hold on to a big Tesla position at such a high price, right? Tesla could easily drop to low 200s or possibly sub $200 because of so much volatility, and then I'm holding on to $4,000 or $5,000 loss, which I don't want to. So with buy rights, you have to be careful of getting in the money very quickly. You have to kind of structure that trade in a way that chances of expiring in the money are higher. So we'll see. I mean, Tesla, we'll see if it's able to close above 250 today. If it drops back below $250, the plan would be to see whether it trades above 248 or not. If it trades below 248, then of course we're going to have to figure out something. Those calls are going to expire out of the money, worthless. So we're going to keep the entire premium. And then most likely we'll be selling new ones for next Friday. So if you really consider the adjusted cost basis right now for 248, everybody who sold calls, earlier this week is most likely getting $5 to $6 in premiums. So your adjusted cost basis is already down to 242, 241, depending on how much premium you got. So that's kind of like your break even. And the buyer's break even is around 255, 256, because it's the strike price plus the premium. That's the buyer's break even. So they're not going to exercise until after it's trading above those levels. So that's why I mentioned that, it's the last trading day for the week, and today is the option expiration. So it's possible that we may find ourselves in a situation where even after the fact that the option's in the money, we're up. Like we could be up. We could be in the green for Tesla because it's not above the buyer's break even. So that's something that I'll keep in mind for today. We'll see how it trades, and then I'll make a decision. So hopefully you got a little bit of insight into that. Okay, let's take a look here. Yeah, David says I'm letting my Tesla calls expire too, so that's good. Ruben, when was the last time you were an employee? Well, it's been well over 4 years. So Srinivas, Caddy, my friend, how are you doing? Holding 30% negative on CELH. What are your thoughts on this stock for the next 1 year? So there's definitely been a lot of selling pressure on Celsius. 4 consecutive months of red for Celsius. It is down quite a bit from its all-time highs, over 68%. I think a support level at $27 is where it could stabilize a little bit better. And that would be the support level that I'll be watching. We can do an analysis on Celsius in a more detailed fashion. So we'll talk about that in another video, perhaps. I can do a video on Celsius. I've got to do a video on Visa as well. So there's a lot of individual stocks that we have to cover. So we can talk about that, in another video. We got 2 more minutes left, by the way, for inflation numbers coming out. So we're gonna take a look at the PCE numbers for everybody who's joining us right now. We've got the personal consumption expenditure numbers coming out in under 2 minutes. Make sure that you participate. We are 160 votes, 40 more votes. We can totally get there in the next minute 30, 90 seconds. Participate. Let us know what are you expecting from the PCE, core PCE numbers today, whether it's going to be at 2.7, above 2.7, or below 2.7. The last 3 months, in fact, we were at 2.6. So this right here was for April, May, June, July. So once I reload this, you're going to see the August numbers at 8:30 a.m. Eastern, but we got 2.6, 2.6, and 2.6 for 3 consecutive months. So inflation really on a core PCE basis has stabilized in and around those levels, and today's expectations are 2.7 according to consensus. So 2.7 is going to be a little bit of an acceleration back higher from 2.6, but it's still going to be lower than 2.8 that we witnessed back in April of 2024. So again, it's really going to come down to what those expectations are going to be for inflation moving forward and how those expectations shift or translate over to interest rates moving forward. Because we do have the next meeting on November 7th. That's going to be 41 days away. So hope you all are ready. Let's do this in about 30 seconds here. 187. 30 seconds, we need 13 more votes. Come on, folks. We can do it. 200 votes is what we need. Participate. Let us know. What are you expecting? I'm going to end the poll here exactly at 8:30, and we'll see how the markets respond to this data point. QQQs leading up to this report is up over 0.5%, or actually 14 basis points, and S&P is up over 10, 12 basis points as well. So we are up 3, 2, 1. There we go. We got 211 votes. Perfect. We're going to come here and reload this page, and the current release is being updated. So that's what it shows here. And we're going to wait. So a little bit of momentum here, pushing higher. So QQQs are still up over 17, 20 basis points. Still do have S&P 500 also moving higher. Okay, so we came in August 0.2% for the month of August here. And let's come over here. So 0.2%, which was a little bit better. So on par with expectations of 0.2% for core. And let's get here. And there we go. Current release, if you come over here, August 2.7. So on par with expectations for core PCE, and headline coming in at 2.2. Headline expectations were 2.3. So a little bit better. A little bit better versus headline expectations. Headline was what was the expectation? 2.3. We came in at 2.2%. So that is actually very good. And then 2.7, of course, for core inflation. Month over month increasing by 0.1%. Both of them, headline and core. And expectations were for 0.1 and 0.2%. So essentially we got beats on two beats and two matches on this PCE number. Markets reacting a little bit more on the positive side, 20 basis points higher, and S&P 500 is up over 17 basis points as well. Nvidia back over 124. Tesla's back up to almost 257 right now, up over 1%. That's good to see. And we're seeing the treasury market. So US 10-year treasury is back down to 3.5% right now, so down about 1% at the moment. Oil prices just under 67.50, and we're seeing volatility. So VIX here. If you come over, let's take a look here. So for VIX, we are essentially flat. 15.3 is where we are for volatility for the VIX. So there we go. 2.7%. On par with expectations, and that's where majority of the votes were at 41%. You guys voted for at 2.7, and headline PCE came in much better, 2.2% versus consensus of 2.3. And then we did have personal consumption expenditure month over month 0.2%, and personal income. And this is actually also quite worrisome because wages have not really been increasing on par with inflation, let alone just the increase in overall prices for a lot of different goods and services, as well as asset prices. So 0.2% is way below consensus expectations of 0.4. So income and wages definitely, coming down. And then we had personal consumption expenditure coming in on par with expectations as well. So overall, I would say that this was a decent report, but really on a relative basis, meaning that if you look at the expectations and you look at the actual numbers, you can make a case that, okay, we beat expectations, that was good, but on an absolute basis, we're still at 2.7 for core inflation, which is still above the Fed's target. And then, of course, we're just getting the 50 basis point cut for interest rates. So, time will really just tell us exactly how good or not so good the economy is doing. Right now, we do have a lot of indicators that we are keeping track of. So if you come over to our recession indicators spreadsheet, this is the spreadsheet that we have. You've got GDP numbers coming in pretty strong, 3% yesterday, so we can pretty much update that. So you come over here to report, and we got 3% on the GDP numbers, so we can pretty much update this. 3%, which is also strong. You'd consider this number to be very strong. We got consumption expenditures that we just got down to 2.7 now. So, that's going to be on a core basis, 2.7. And then we've got unemployment rate sitting at 4.2%. So these are the three, the ones in green that are strong right now. CPI on a year-over-year basis at 2.5 is considered normal. So that's good, somewhere between 2 to 3%. That's still close to the Fed's target. And then initial claims, we got yesterday initial claims as well. They come out every Thursday. So if you come over to the jobless claims numbers, we've got 218,000. So that is still, pretty low number. And continued claims growth only 2.5% on a year-over-year basis. Initial claims down 80 basis points on a year-over-year basis. So it's really just going to be these 3 or 6 line items that are normal and strong. Other than that, we got retail sales that is negative. Unemployment growth, in other words, how many people are unemployed. Unemployed persons growth 12.2%, which is also considered weak. And I think that's probably one of the reasons why the Federal Reserve also focus on 50 basis point rate cut. And then you've got the personal savings rate, the manufacturing PMI, the services PMI, the loan growth among banks, jobs to unemployed persons, right? So that's the job openings versus how many people are unemployed. all of them are relatively weak to weak as well. So it's really a question of whether these weak and relatively weak indicators turn into normal and strong before the normal and strong indicators turn into weak and relatively weak. So that's really what's going to dictate the state of the economy moving forward. And the biggest wild card among these indicators is inflation, whether it's going to accelerate back up or not after the 50 basis point rate cut that we just witnessed, and also the 25 and 50 basis points the Federal Reserve is expected to do. And the market's, again, pricing in for another jumbo cut in November. So another 50 basis points is what's being priced into the market, and then 25 basis points in December as well. So basically 75 basis points worth of cuts is what the market is pricing in more additional for the remainder of this year. So that's where we are with the state of the inflation and all these different numbers that are coming out. But like I said, the biggest wild card is going to be inflation over the next 3 to 6 months, if it's going to continue its trend lower, or are we going to see some acceleration back up as we did back in the 1970s and 80s. And then, of course, some of the other indicators to also keep in mind. So a lot of people saying that these pre-election numbers could be cooked. It is possible, but this is the best we have to work with, obviously, right? Unless we go out there ourselves and start doing surveys and trying to figure out, okay, what is the true inflation numbers. You can also sort of see from Trueflation, those numbers are even lower. If you come over to Trueflation data here, and let's just see, I think they've got the CPI numbers on here, which is significantly lower than what we have seen in the past. Let's see, CPI, inflation. So PCE inflation index, we can take a look at core and see what they have on there. So that's more of an index here. Let me see if I can, because I haven't used their website a whole lot, but let's see. Because they already have those numbers way less than what the government reported numbers are. When will we see Tesla skyrocket to the moon? Well, so markets are starting to move higher a little bit here. So QQQs are up 26 basis points. We got the SPY up 23 basis points as well. And then we've got Tesla back over 257, so up over 1.2. And NVIDIA back over 124 right now. So lots of momentum coming in for NVIDIA as well. So this right here is the number, Trueflation. So we are at 1.53% on a year-over-year basis for US reported number. And of course, we know the US government reported number is 2.5. So you can make a case that, okay, the government is either over-reporting or under-reporting these numbers. They're cooking them up. But Trueflation, with a different calculation, different ways of, calculating these numbers, is figuring out a lower number. So we utilize modern consumer spending data sets along with cutting-edge technology to deliver the world's only verifiable daily inflation indexes. Traditional inflation metrics are outdated, they said, and that's why they've got even a lower number right now. So they were at 3% back in March. If you come over to, for as long as we can go, 11%. So you can make a case that, okay, the government was underreporting the numbers back in 2022 when we were at well over 9%, when in fact we were at over 11%. And now we've come down to 1.4, 1.5, when the US, of course, is reporting for numbers closer to 2.5 or 2.7. If you look at some of the other things, like for example, housing, they're suggesting for year over year. Let's just come over on a 1 year basis, already only at 0.71%. Transport, we are at 1.47, 1.5. Utilities, we are at 2.37. Household daily items is going to be at 1.1%, it's coming down from 6%. And then let's see some of the other categories here. Education, So that's what they're suggesting. For housing has been the biggest culprit for overall inflation numbers, as it continues to take a lot of time to come down. So coming over to these data points over the last 20 years, rolling over, but it's really just shelter prices that are still pretty elevated, and they've just been sort of stabilizing a little bit, well over 5% on a year-over-year basis. They're just reluctant to come down below 5%. Seen a lot of progress from 8%, but still not as much progress. And energy, of course, has done its part. It went up all the way to as much as 41% at one point. Gas prices were up 41% on a year-over-year basis. Then they went into deflation. They went back up into inflation. And then, of course, we're now back in deflation, down about 4% on a year-over-year basis. And food prices also now stable at just over 2%. This is good. I mean, this is exactly what the Federal Reserve was hoping for, that inflation would come down near 2% and then stabilize around 2%. But of course, the overall numbers have not really done that all that much. They've stabilized at a much higher level because we do have core inflation on a CPI basis still well above 3% right now. So markets gapping up and down all over the place here, but Nvidia back up to 124. Tesla's at 257 right now. If you come over to some other Magnificent 7 individual stocks, so for example, Apple up over 39 basis points at the moment. Microsoft is up 33 basis points. Amazon's flat. Tesla we already went over. Netflix here down about 30 basis points. Advanced Micro Devices up over 27 basis points as well. So a little bit of a risk-on environment back in the markets after the inflation print that we just got. So do you think that we'll have a 10-year secular bull market again? It depends largely on earnings. I think that's really what's going to be the driving force for the markets over the long term. I think everything, as we have discussed many times over, everything can really just be boiled down to one single metric, and that is EPS, earnings per share. If you've got earnings growing, you're going to have the markets also going up. If the earnings start to decline, then regardless of what happens, markets are going to have a very tough time moving higher. So we've talked about the... Let me see if I can bring up the chart or the Excel spreadsheet that we have. I'll have to try to remember what is the name of that spreadsheet. It's not this. Kind of does the job a little bit better, but it's not this. Let me see if I can find it. It's also not this, I feel. Yeah. So this was kind of going over that video where everything, we have to really boil it down to how it impacts earnings. And if you can figure that out, I think that's really what is the most important thing. I'm going to try to find it one more time. See if I can, let's see. Nope. What was it called? What was that spreadsheet called here? Going over to the price to earnings. I've got so many spreadsheets. I need to organize them better. Let's see. I'm gonna make it one more try. S&P 500. PE, 500 targets, changes. Nope, these are just targets from back in 2023. $500 changes. Annual changes. What did I name that spreadsheet here? PE, what was it? SPX maybe? Oh god, is it this one? Streaks, no, this is mostly related to streaks here. Yep, this is just a streak spreadsheet. If I find it, I will bring it up and maybe I'll do a video. I have to see, like, go back to my old videos and see what I named it. But there's a very good chart that I had which shows the growth in earnings and it shows the growth in the S&P 500. It's almost identical. Sometimes one lags the other since markets are obviously more liquid and they're more forward-looking and they start to price information in faster. The markets kind of go down before earnings go down. And then markets recover before earnings start to recover because the markets are forward-looking. They already anticipate whatever is going on in the world at the time, whether there's a recession, whether there's rate cuts, rate increases, the Japan carry trade, the global financial crisis, the dot-com bubble, whatever it is, right? The market tends to anticipate how is that going to affect the earnings and adjusts for those changes. And again, of course, goes down. So over the next 10 years, the question really is, that we should be asking ourselves is, are we expecting earnings to keep growing? Because if earnings keep growing, keeping everything else constant, even if the multiples stays where they are at 20 or 25, if earnings keep growing, which is the denominator, we can expect the markets to keep going up, which is going to be the S&P 500, because the index level is nothing but a product of the multiple and of course the earnings as well. So, but I do expect earnings to increase over the next 10 years. May not be at the same rate, but I do expect them to continue to appreciate over time. And a lot has to do with the overall margins for profit as well, and that's been growing as well for big tech, for Magnificent Seven. It's gone from 7 to 8% to as much as 12 to 14%. So there's definitely been margin expansion as there's been more pricing power among Magnificent Seven companies, and they've been able to again create this environment where they're the biggest and the best companies on the block. So yeah, that's long term. Continue to be very optimistic here. So maybe know how much your net profits from the stock market yearly. So I have to go back and check, but I can show you in terms of percentages. The options portfolio is up like 32% year to date, and the long term portfolio is up like 45% on a year to date basis. And the other main portfolio is kind of tracking the markets right now. It is up. Let me just take a quick look because I was looking at the 9-month reports here the other day. So the other ones are 37. No, hold on. So it's 45% for the growth long term, and then options is 32%. And there's one more that was up like on par with the market, slightly above the market, I think 20%. So 36 and 32.5 and 48. So 48 on a 1 year basis, so 48% for one of them, which is the growth account. The main fund is up 36%, which is pretty on par with the S&P 500, just slightly better than the S&P on a 1 year basis. And then the options portfolio is up 32% on a year to date basis, not on a 1 year basis, but year to date. Shelter is usually a lagging indicator. Yes, so that is correct. It's going to take some time to fully see in effect the trends from higher interest rates that we're witnessing. So, does anybody have any options expiring this Friday, today? What are you guys trading? What is expiring for you guys? Let's talk a little bit about that. Let's go over some trade opportunities. Tesla's up over 1.5%, 258. I think 269, 270 is possible by next week after the delivery numbers. And it was actually quite interesting, the trade from yesterday. Whoever sold 3,000 calls on Tesla 250 strike, and then they bought the 250 puts on Tesla. I think they received the net credit, if I'm not mistaken, for that trade, is because they received $26 for the calls they sold at 250, expiring in November 15th, and they bought the puts for $21 per contract. So I think they received like $5 in net credit for that spread, which if you multiply by 3,000 contracts, we're looking at $1.5 million in net credit that person received. So by expiration, if Tesla is above 250, of course they lose out on the entire put premium, and they have to sell their shares at 250. and the amount of money they received over the next month and a half is 1.5 million. And if Tesla is below 250, then their call option expires out of the money. They keep the entire premium, and their puts also print to the downside. So that is the trade that they have on Tesla. And this is actually covering all 5 big catalysts, 3 specific to Tesla, and then 2 that are more specific to the market. 3 specific to Tesla are the deliveries, the earnings, and the robotaxi event. And the 2 specific to the market is the election and the FOMC. So quite an interesting trade there. And then NVIDIA, as we discussed yesterday, we've got 45,000 contracts, $80 puts, expiring in, I think it was January of 25. That's a lot of premium, $5 million in premiums that someone ended up paying just to get 45,000 contracts worth of $80 puts on NVIDIA. What did they pay? I forgot what that cost was. I think $1.16. Yes, $1.16 is what they ended up paying for NVIDIA. So their break even is around $78.84 if you account for the premium that they've paid. So they're betting that NVIDIA is going to be below $80 by January of 25. It's a pretty bold bet. $5 million. It's no joke. Okay. Henry says, I would like to learn call options. So I would encourage everyone to just learn about options and how, they work, because I think it's going to be super helpful, even if you don't want to trade them. I think just having an understanding of, what the other investors, traders are trading can really help you make better decisions, because institutions in Wall Street, they, trade options on a regular basis in very, very large quantities. And that can really help you better understand, okay, what kind of bias the market has for specific stocks, right? You can look at the open interest, you can look at the volume, you can look at deltas, you can look at the different contracts, different strikes, and different expirations to better understand how the market's positioned going into the next few weeks to few months, even as much as next year. So definitely, I think it can be a very useful skill to learn how to read the options chain, how to make better decisions using that in your strategy. So what's my price target for Tesla for 1010? Okay, let's ask everybody else. We've got exactly, let's see, 1010 is going to be a Thursday. So we got less than 2 weeks. For Tesla's robotaxi event. And let's do a quick poll on where everyone sees Tesla by robotaxi event. So I'm going to put above $300. Then I'm going to put between $275 and $300. Then we're going to put $250 and $275. And then we're going to put less than $250. So let's just do this. Let's start a poll. Right now we're at 257. So participate. Let us know what your expectations are for Tesla by the time robotaxi gets here. It's just less than 2 weeks away. It's taking a little bit of a time to load in the chat here. So there we go. We've got the poll now. So I got the poll now. Can you guys see the poll for Tesla? Because it was taking a little bit too long for it to load up. And now we've got a poll for Tesla's price by 1010 robotaxi event. You're able to see the poll, but I'm not able to see any type of votes here. So I'm not seeing if you guys are even voting. Are you guys able to vote on it? Yeah, let me just restart it. I don't know what happened there. It already did have 77 votes. I don't know. It wasn't showing up. You voted, but it was still showing 0. Yeah, so it wasn't showing up, right? So Tesla price on 1010. Something wrong with YouTube there. Let's do above 300. Then we'll do 275 and 300, 250 and 275, and then we'll do less than $250. Let's see if this works. There we go. Now it should show up. There we go. Now it works. Okay, so now we've got, it's still showing me 0 votes. Okay, 23 now. Okay, now it works. 35, 39. Participate, people. We got almost 400 people watching, so let us know what your expectations are for Tesla by robotaxi event, which is 10/10. So if you're going electric, what would be your car choice? I'll certainly be looking at Tesla for sure. And Tesla is, probably one of the most efficient and technologically advanced cars when it comes to electric vehicles. But I'll definitely be exploring other vehicles as well. From a design perspective, I think Tesla can do better from a design perspective. I think Tesla can be better looking cars. I've seen a lot of really, really good, sort of good looking, right, aesthetically pleasing electric vehicles. And that's kind of like the only thing. But I know the technology advancement and the efficiency of Tesla is kind of unmatched. But I don't really need a car because I don't really drive anywhere for the most part. So, okay, so we've got 42% of people right now, investors, expect Tesla to be somewhere between $275 and $300 by the time robotaxi gets here in less than 2 weeks. Rivian, build quality is excellent. I don't really need a car, guys. Like, where would I go? I don't really, drive much. I do like to drive a lot, but I am working from home, so I don't really need to go anywhere. So eventually, of course, I'll get one, but right now I feel like it's not worth it. CH, you don't have wheels? Well, not really, not at the moment. If I do need, like if I have my family visiting or if I have someone coming over, then, I do rent a car for a week. That's it. But other than that, I don't really need it. So every time I have to go somewhere, I just take public transport. I mean, public transport here in Dubai is not that great, so I take a cab, and that's like very rare. And then other than that, if I'm back in India, I have a car there. And then, yeah, pretty much wherever I do go, it's like a short-term rental, really. That's it. Just rent a Lambo when needed. It's cheaper than owning a normal car. Yeah, now they deliver groceries. I mean, there's a grocery store right downstairs, my home, so I don't really need to go anywhere. There's a gym, there's groceries, there's a pool, there's a salon, there's restaurants, there's cafes, there's everything literally downstairs. And the airport is like 5 minutes. I have it on record. Literally from my bed to the gate, I've made it in under 30 minutes. In under 30 minutes, because the airport is 7 minutes away. I literally go in, check in, bag drop, security, immigration, because it's like super easy. And I'm at the gate within 30 minutes when I'm taking a flight. It's insane. It's absolutely crazy. I love it. I love it. So anyway, so we got 41% right now. Still expecting. Everyone seems to be a little bit more on the bullish side for Tesla going into robotaxi event here. $275 to $300 right now. That's the target. I think that's a fair target. I think we can get up to that area of supply for Tesla, something that we haven't been able to break out of in a very long time. And again, the high price target was $299. That was back in July of 23. And the last time we were above 300 was back in September of 22. So it's been well over 2 years since Tesla's traded above $300. So okay, I'm going to read some of the comments here. It's time for Tesla to launch a new model or two, in my opinion, like the Model S, but those models are getting long in the tooth. Yeah, Model S is probably the only vehicle for Tesla, like best looking vehicle aesthetically that I really like. I remember my uncle bought a Model S in New York. We drove all the way from Boston to New York. It was a secondhand purchase, and he negotiated a pretty good deal, and he got that car. I think it was like 5 years ago he got that Model S, and it's been one of the best vehicles he's had for a very long time. While should today's print encourage to buy stocks, it looks like we're heading to more cuts. It is definitive now. Yeah, I mean the market's pricing in for very strong probability for more rate cuts. 50 basis points in November, and then another 25 basis points in December. Probabilities just increased a little bit more after the numbers that we just got, but a lot of it depends very much on volatility, the MoneyVest index. If you're trading or investing in broad-based ETFs and index funds, that's totally fine. You can dollar cost average frequently depending on your frequency and the monthly amount or the weekly amount. But when it comes to individual stocks, I would still kind of refer to the shopping list with the fair values, the light buys, heavy buys, no-brainer buys. I think those are going to be the guiding sort of prices for me personally. Does Tesla cars hold value for resale? I mean, I don't think it does right now. After the significant price cuts that we witnessed, I've seen a lot of people, and that's just been the used car market in general, and even buying new vehicles. A lot of folks, unfortunately, have been underwater on their vehicle purchase because, let's say, they bought a vehicle for $60,000 or $70,000, and they financed it. And the vehicle price, let's say 1 year later on resale, is $40,000 or $45,000, right? So not only has the price dropped, depreciated significantly, but they owe more money than what they would get by selling their car in secondary market. So that's what it means to be upside down on a loan, because the value of the asset, or in this case a liability, because at the end of the day, let's face it, cars that are depreciating asset, or really just a liability, is less than what you owe to the bank for that very said liability. So I think that's why I saw a video not too long ago. It was about finding the sweet spot when you're buying a vehicle. It was about buying a vehicle which is like 2 to 3 years old, which doesn't have a lot of miles on it, but has already depreciated significantly after it was bought for the first time. So that was like the sweet spot, 2 to 3 year old, with less than 10K or 5,000 miles on it. Narga, why are you so concerned about my passport? Let that be. Seen asked a couple times already. Yeah, so that was like the sweet spot that I was able to like find a video on. So when I actually do enter the market for cars, I'm gonna be hoping to get that. Never had a desire to own a Tesla. That's fair. Yeah, but I feel like now everybody's going to be moving into electric vehicles, as we already know. There was a huge EV hype back in 2020 and 2021 when Tesla was rocketing higher. We had so many companies, just producing electric vehicles. And then, of course, it's very, very difficult to maintain those margins at a high level. But Tesla is one of those companies that, even after being on the verge of bankruptcy, has been able to make it profitable. So no update yet. I will let everybody know in the Discord, like I said, when I'm making my way over to Florida. And again, we've got a MoneyVest meetup in Florida this year, and everybody who's interested, just on Discord, we'll arrange something. We've already had a couple. They were fantastic. A couple of years ago, we had one in New York. Last year, we had one in Los Angeles. And then this year, we're planning one in Florida. So profit price on PayPal. So analyzing U.S. stocks, because that's where I invest. That's where I invest is in U.S. stocks. And I think anyone can analyze any stocks here if there's opportunity. I invest in Indian stocks as well. I think Indian stocks also have a lot of potential. We've been talking about INDA, which is the Indian ETF. You can see that it's up to almost $60. Since we started first buying it, it was around the $39, $40 range. Now up 50% from those levels. So for everyone who doesn't have exposure to the Indian stocks directly, this is the ETF that I've mentioned in our Discord INDA, which has done again incredibly well, and there's still a lot of potential for India to grow over the next 10 years. So I don't think there's any restrictions to analyzing whatever different stocks here. You can invest and analyze different opportunities everywhere. Okay, we're in Florida, so we haven't decided yet. We'll let everybody know. We're gonna figure that out as we get closer to the date, but it's most likely going to be in November, and I'll finalize everything in October. Nothing better than a BMW and Porsche. I do like BMWs a lot. I do like Mercedes as well. I love their G-Wagons. There's a lot of G-Wagons here in Dubai. Like every time you're going anywhere, you can see G-Wagons. You can see the BMW i7 as well. That is an incredibly good-looking car. I mean, just fantastic. Yes, the i7 and the Mercedes G-Wagon. Just absolutely incredible. Okay, so coming back over to the market. So Nvidia is back up 124. Tesla's to $257. We've got SPY up 22 basis points. QQQ's up 24 basis points. Gold prices just over 26.66. Volatility is a little bit over 15.3. Crude oil just over $67 right now. And we've got Ether back over 26.50 as well. And Bitcoin also back to almost $66,000. Yeah, if possible, I will come to Florida as well. Yeah, if you guys are in the area, definitely do join us. We'll make the arrangements. We'll plan something, and we'll coordinate on our Discord. Is Dubai a nice place to live? It's fantastic. It's one of the best places in my opinion. It's very convenient. Everything's like really quick. Everything's fast. A lot of the processes that take a lot of time are done very quickly. So for me, it's been incredible. So Srinivas, only Discord members can join. Well, Discord is where we're gonna organize everything, like we always do. Like that's where we kind of organize a chat. We have a separate chat that's gonna be created for a Florida meetup, and everyone can coordinate there. Similar to what we did back in New York, we got a head count of how many people are going. Then if possible, I'm also gonna be bringing in T-shirts, the Money Vest T-shirts, for everyone. So we kind of organize everything on Discord. So of course, all the details are going to be shared on Discord. So it's easier for us to organize. Okay. Yeah, whenever you are here, let me know. We do a lot of meetups here in Dubai as well. I just met with few members last week. We went on nice coffee. Talked a lot about options, stocks, real estate. We talk about the markets, pretty much all the different benefits of different things, different strategies, taxes. I mean, these conversations are very interesting, intelligent. You get to spend time and develop more connections and relationships. And I'm always surprised and always interested to learn about what people are actually doing. And we've got such a wide variety of people from different backgrounds and different expertise. In our community. So that's always good to see. Business owners, people working in IT, people working in film, acting, artists, musicians. Like there's almost always interesting stories, and you can find people and build connections. Come for a free T-shirt. Only for a free T-shirt? Come on. No, but yes, we're gonna print some and bring them over. Okay, so almost 200 votes. Market's going to open in about 20 minutes or so. We're going to keep this live stream short because today's Friday, so I got to figure out my options and send out alerts in Discord. But Nvidia here back up to 124. Tesla is at 257 right now. We got S&P 500 up 24 basis points. QQQ up 26 basis points. New all-time high for the S&P coming in. And almost 200 votes right now. $275 to $300 is where the price target's pinned for robotaxi, according to 37% of investors as of today. I'm going to end this poll now. Once again, everyone, thank you so much for joining us. Quick take on SMCI. Seen a few questions about that stock, and selling off very aggressively. Next support is going to be down at 315. I'd be very careful with this stock for the time being because of the regulatory issues, the missing deadlines, and a lot of accusations on Supermicro of how they've done their business. So 315 is going to be that support level. Trades inside this lower high and lower low falling wedge pattern, and 315 is a possible target for SMCI. Thank you so much, everyone. Make sure that you drop a like and subscribe to the channel and join our Discord if you want to get access to the MoneyVest website, members-only private videos, trade alerts, options portfolio, and, of course, the Florida meetup that we're going to be doing. So links can be down below. We'd love to have you on board. Happy investing. Have a great weekend, and I'll see you all Monday morning for another market open. Take care.